Hi, Alex. Thank you so much for coming to Investor Talk. How are you?
Hi, Max. Good. Thank you for the opportunity of talking with you and Equity Match and tell a bit more about what we're doing here.
Thank you very much for your time. You are the first investors we talked to in Brazil, so I'm very happy. We open another frontier.
Great. It's a pleasure. It's an honor to be the first one.
Thank you so much. Uh, Before we talk about your corporate venture capital, shall we give an introduction yourself?
Okay, perfect. So I'm Alexandre. Today, I'm the head of corporate venture capital from Americanas, which is the biggest retail company in Brazil. Um, Today, we have 3,500 stores in Brazil, more than 55 million people using our app and website, more than 35 million using our digital wallet as a payment. Um, we did more than 30 million deliveries last year, and we also had 4 billion views in our ad platforms. Even being it a physical one or a digital one. And now I'm taking care of the venture capital area here, where we look for startups to invest. And before that, I was also a founder. I had my own startup from 2015 to 2020 when I sold it to Americanas, which is the company that I'm working right now. And also beyond that, I graduated in engineering and I have masters in business administration. So it's more or less like this.
That's a very solid background. Thank you. Uh, I mean, it's very interesting. You had done your startup, sold to the company you're working today, and that's great. I mean, you very much can understand what it means be an entrepreneur and what means invest in startups.
Yeah, it's very good to have like this kind of perspective because every time I talk to a founder, I try to look in an empathic way, like seeing how the founder is seeing, you know, like how things works and not just looking from the corporation perspective. Otherwise, we won't make any deal. So it's I think it's very important to have this kind of experience in order for you to be more empathetic when you talk to the other side.
I do believe so. I mean, you need to know where this
Hmm.
guy, how do they feel, or this kind of even the emotional side. It's very important. Uh,
Definitely.
Please let me ask you, in terms of geography, where do you prefer to invest with your venture capital?
We already invested in companies in Brazil and outside Brazil. Um, Outside Brazil, we invested in Israel and Silicon Valley based companies. But we don't have any issues or preference about region. If it's like it's a good founder with a good idea, and mainly if it is a good idea where we can scale the idea within our ecosystem, and also we believe that the founder will be able to make the company goes bigger, then it fits for us. Like region is not a constraint and probably won't be from here from now.
But let's say I'm based, for example, I'm a startup based in UK. You invest in us. Should the startup having some connection, or should the founders be willing also to act in Brazil?
Yeah, for it's not a constraint, but it's a plus. So we look for startups where we can invest and scale them in our ecosystem mainly because that's our main leverage. Otherwise, the startup will look for other kind of investor that have a leverage bigger than ours. Um, for example, we have uh, 55 million using our app. If we can plug the solution, the service or product of their startup within our app and offer them to our clients, we can help the startup scale like in a very fast way. Or another example, we have 150,000 sellers that sell products within our website. So we can just offer some kind of product or service in a B2B way for them too. Um, and that's why for us, it is not like not prohibited to invest in companies that not necessarily uh, already have some connection in Brazil, but it will be better if they do have, because then it will be easier to help them scaling here within our ecosystem. Because uh, we see the return of investment in our corporate venture capital more as a consequence than as a cause. The main reason is, okay, if I invest $1 million in a company, for example, and 2 and 3 years they do an exit, or they maybe do an IPO or something, they do like a liquidity action. We can do 10x, for example. Okay, we we earn $9 million, for example. But if we bring a startup that have a solution that can, for example, enhance our revenue in 1% or reduce our costs in 1%, this is much bigger than any kind of investment return. So for us, like the kind of investment is much more like um a closer relationship with the startup. They say, okay, now you're part of our team. We'll help you guys scale faster in our ecosystem, because then our ecosystem will benefit and you will benefit also. Um, so the money is more a consequence than a cause.
That's the beauty of the corporate venture capital. The way what is behind any the logic how you invest money is very different from the logic of a typical venture capital, where there is not that much connection on your balance sheet. Actually, there is no connection at all. Meanwhile, in the corporate venture capital, the beauty is sometimes you can leverage technology. That's why you can even buy company that have zero revenue, because it's translated into your revenue. So the logic behind is
Yeah,
very different. I do like
and
it.
and the bad thing, Max, it's that is today is less bad than it was in the past, um, because corporate venture capital used to set a lot of constraints for the company. For example, you now that I'm investing in you, you won't be able to do business with this kind of companies because they are our competitors. But because of that, startups were refusing to do business with CVC. Now the market changed a lot, and I'm seeing that CVCs are not putting this kind of exclusivity or constraint for the startup, because then probably it will be difficult for the startup to to raise capital with VCs, because the VCs will say, okay, now you're limited of growing because of that. And then because CVCs are stopped putting this kind of constraints, almost there are no bad sides in that there's no bad side investing with CVCs, because um, like you said, we have like a huge ecosystem, a lot of partners, a lot of like things to just do a plug and play, and then you scale a lot. And VCs don't have this kind of ecosystem to connect. So
Yeah, that's
that's
true.
one of the beauty. I agree with you.
Absolutely. How much do you normally invest in terms of ticket?
We focus in proceed and seed, and Series A. Normally, we are not the leader; we just follow. The reason we do that is because we are the CVC started this year in our company, so we're not mature enough to lead some Series B rounds or something like this. Um, but normally the checks varies from, in terms of pounds or dollars, like from 100 to 200,000 pounds or dollars until 1 million, more or
Okay.
less.
Interesting. I mean, you said earlier, so pretty much where you invest is very early stage. Uh, how do you find conviction when investing? What are you looking more in detail? The company, the team, the product itself, or the service?
Okay, so we are looking mainly in five different industries or verticals that we say here. So the first one is startups that have solutions that can enhance the experience of our clients in our physical stores. The second vertical, it's focused more in the digital vertical in terms of e-commerce. And our goal here is to increase the NPS and to have more market share. So companies that can help us keep this goal, like we are looking for them too. The third vertical, it's about fintechs. So we have AMI, that it's our digital wallet with 35 million people. And we are offering credit as a service for B2B and B2C. So companies that have this kind of solutions, we also look for. Uh, the fourth vertical is logistics, and our goal is to deliver ultra fast deliveries and dark stores mainly. Um, and the fifth one is ads. So uh, startups that can help us being more assertive with our ads. They make sense for us too. So we like a big ecosystem of in the retail, physical, digital, uh, fintechs, logistics, and ads. So every startup that is inserted in these kind of verticals makes sense to us.
Thank you. Before the pandemic, was pretty much, at least in Europe, very, or US as well, very key to see the founders sitting, having maybe even dinner with them, and knowing them with a face to face. And after the pandemic came, everything changed. What's your perspective in this? Do you had to meet the founders, or you can
Um,
go all the way to a Zoom call or team call?
yeah. So how does it work here? So normally we have a website where companies can describe themselves saying a little bit more about them and saying like what kind of synergy they see within our ecosystem. Then we schedule a call with the founder to get to know a little bit more about the startup. Then after getting to know the founders and the pitch deck, we do a proof of concept project with the startup uh, to see if the synergy that we are planning, that we are thinking that exists, truly exists, because we are not specialized in any area here. My team, the CVC team, we are not specialized in, in every area. Our specialization is finding the best startups to solve the biggest problems. So we need to validate if they really work, and after we do a proof of concept and we attest that it really have uh, synergy with us, that the founders brief the same values that we brief, and everything. Then we go to the pitch day where we present 3 or 4 startups every 2 months to the board here.
Okay.
Um, and then the board will give a go or no go to the next phase. If the founders are in Brazil, uh, normally this pitch day we do personally with the founders. Or if the founder is outside Brazil, we don't necessarily need to meet him or her in person. So it always depends of the good sense, but mainly what happened is if the founders are in Brazil, we already did a proof of concept. They are in proceed seed or Series A phase, and they're raising money. This pitch day is made personally. But if they are outside Brazil, normally don't need to be personal. It can be all virtual. The companies that we invest, they are outside Brazil. All of their pitches were made virtual. We didn't meet in person.
Perfectly clear. How much do you get involved with the startup you're investing in? It's a day, it's a weekly meeting, for example. How many times do you like to meet the founders after investment?
Uh, it depends of the uh, need of synergy. For example, there's a company of cybersecurity that we already plugged in all Americanas. So their goal right now is to scale in other companies within Latin America. So in this kind of startup, um, we do a monthly basis meeting to see, okay, how, like, who are you looking for, how we can present you guys to these other companies, etc. But there are some other kind of companies that we have more incentive to, like, that we didn't scale in our whole ecosystem. Then we have a weekly meeting with them to see, okay, what can we do to scale until we scale to our whole ecosystem here. For example, a company that we are talking to that delivers in favelas here in Brazil. We have like hundreds, thousands of favelas here. So it's like a big project that we need to keep building new uh, uh, distribution centers within the favelas and etc. So because we didn't scale to the whole Brazil and the whole ecosystem, we need a more regular basis meeting. So depends in each case, but at minimum we have this monthly meeting.
Thank you. You said before you work into these startups early. So if and when they need another round, maybe VC should be somehow involved, as we've been talking already. Do you help them to get any introduction to new investors?
Um, because we are kind of new, we started this year in terms of investing in companies. We didn't reach a phase where the startups that we invested started raising another round. So far, we 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 hadn't been exposed to this problem. However, when the time comes, because we have a lot of relationship with VCs, we have more than 20 VCs there are partnered from ours because they share their deck, like the ones that they invest and everything. We exchange with a lot with VCs, and that's makes us like that brings us a good relationship with them. We can definitely help the startups to raise more money because we have good relationships with VCs, but it didn't happen so far.
I do believe good network helps in any way.
Yeah, a lot.
Uh, I saw a big difference between venture capital funds and corporate venture capital funds when it comes to portfolio integration or collaboration between startups in the portfolio. So, in your case, should your startup having some kind of interaction between them or just with your company?
Yeah, like it would be good, but not necessarily uh, the startups has something to do with one another. Um, because normally we don't invest in companies that have their main ICPs, ideal clients, persona, that are startups. We normally look for startups that their main ICP are enterprises or like a B2C approach, because then we can help with our ecosystem. So that's why normally we don't have that much synergy between the startups. But one thing that we help and we leverage with them beyond uh, the connection within our ecosystem, we have more than $1 million in benefits of partners. We have more than 50 partners, for example, Microsoft, AWS, and other partners in the ecosystem that gives credit of their products or service to the startups that we accelerate, because they know that probably because we're accelerating them, the startup will be bigger in the short period of time. So it's important for them to give this kind of benefit.
During the last 24 months, the most common word I never have been hearing is pivoting, pivoting, pivoting. It's because many startups were very close to fail. So, what's your point of view? What's your suggestion to founders when it comes the time and the day where you need to decide if pivoting or not, and maybe pivoting means do not failing? Because many of them they do believe pivoting is a proxy of failure, and they are very reluctant to pivot.
Mm-hmm. So my view of pivot, it's you need to do it if the business model that you're working on right now doesn't have, for example, LTV above CAC positive, for example, or in other words, you haven't found your product market fit yet, because sometimes there's a lot of cases where the entrepreneur starts with a solution and to find a problem, and then you're gonna have to hustle a lot in order to start scaling and start selling and everything. So uh and the market is changing every day. In the pandemic, every hour was changing. So um it's very important, in my opinion, to be flexible to pivot. And it weren't only the startups that needed to pivot in the pandemic. Like it happened with almost every company. So uh I think that's one of the main abilities that the company must have. It's the capability of more than capability, the flexibility of changing your business model, um, regarding the environment. So like Darwin said, the stronger the strongest uh, species are the one that adapt more, not the strongest one. So I think that's one of the main uh, things that a startup should have. And regarding this concept, Max, another thing that I'm seeing that it's growing a lot today, regarding ideas and pivoting and something like this, is the venture studio model. It's
Yeah.
like startup studio, like Atomic, Better Works, Antler, and other ones like this. They have like a lot of ideas and they test them in the market, and they only uh, make the ideas happens the ones that say that they saw that have product market fit, for example. And I think that's a very good approach, because otherwise you have to hustle a lot to find a product market fit. So if you can test the market in a low cost way to see what is really solving some pain, would be the best way to scale in a more smart way when it starts to scale, and do not throw money in the trash.
That's completely true. I mean, anyway, venture capital now it's evolving. There are so many new way how to start helping founders, and also investors. do not waste in money and try to have the market fit and understand if the market is there or not for you in less expensive way as it was at the beginning 10, 20 years ago.
Perfect.
What can be the perfect pitch to convince you?
So normally there are five things that we need to see in the pitch. There it's like they need to have, otherwise it's incomplete for us. Uh, the first one is the problem they are solving. The second one is the solution they are providing to this problem. The third one is the size of the market. We don't we don't invest in companies that have a market that is less than 1 billion, for example, $1 billion. The fourth one is the team. That for us it's really important. And the fifth one would be why they are the best ones to do this instead of their competitors, for example. So it's the differentiation, like why they differ from the other ones that are already doing this, something like this. So if they have these five things, and we believe that these have synergy with our business, maybe the synergy will be the sixth uh, thing that we see, and maybe the synergy is also one of the main important ones. Then we can start a conversation and do the proof of concept, and then if it makes sense we can invest in them later. So I think this will be like the best things that they must present in the pitch. And another thing is, don't pass 10 minutes. If you're not able to present your idea in 10 minutes, uh, and if a 7 or 8 years old person cannot understand what you're saying, probably it, you have to like do another time, like to make it in a better way. You have to be like a simple communication, like everyone needs to understand.
I do believe so. I mean, yeah, make it very, very simple. As simple as stupid, but
Yes,
but works as
KISS principle. Yes.
absolutely, absolutely. Let me close with intellectual property. It's important for you belonging to the startup you are investing in.
Yeah, it is important, uh, but it's not extremely necessary, because not all of the companies that, like the minority of them, they do necessarily have an IP. Um, Mainly because we invest a lot in SaaS companies, and it's very difficult to do some patent in SaaS. You just change a line in the code, so you're not copying anything else from the original version. Um, I don't think that's like a changing in our point of view, because we work more like an ecosystem than like a product company like Apple, for example. So I think when you are a product company, IP is extremely important. Uh, but when you are more focused in a ecosystem, services, and things like that, I don't think IP it's like a game changer. It's good, but not like a game changer.
Where do you think your company will invest? Which are, in your opinion, the main sectors more attractive for you in the coming years?
Speaking, like, normally we look for opportunities that's they are a little bit more disruptive. Um, I cannot say exactly like the main thesis that in terms of uh, business model that we are looking, because a little bit of we are a public company. We have some things about that I cannot say, but I like looking in technologies that will be very present in the near future. For example, augmented reality, virtual reality, Web3 approaches, um, new ways of producing food. Um, there's a cybersecurity approach like that we like to look for. Also, mainly seeing about uh, one of the biggest problems in Web3 right now. It's the cybersecurity space. There's a lot of fraud, for example, in crypto. So I think will be like a market that will be bigger in the next couple years. Um, but specifically, the one that excites me the most today, it's the augmented reality, because I I see that when Apple releases their augmented reality glasses, uh, the market will start looking at this in a very strong way, like the market did when Facebook changed their name to Meta. And the reason is because the augmented reality glasses will bring together the cell phone, the computer, and the television market in one, because you will be able to reproduce the cell phone, the computer, and the TV from your glasses. And you pick up one of the three biggest industries in the world. For example, Apple and like almost all the big companies in the world, they are technology based, especially in the hardware space. Um, and then we will start seeing internet not in more a 2D way, but we'll see it in a 3D way,
Yeah.
and this will bring a lot of huge new opportunities in the market. So we already starting doing some kind of projects that involves AR today, looking in some companies that follow this path. Um Today, like having the cell phone as our AR enabler, but to start testing it for when the AR glasses for consumers comes, we'll be prepared to this new era.
Alex, thank you so much for coming to the Investor Talk. It's been a very great pleasure for me. Thank you.
Thank you for the opportunity, Max.